Hello everyone. Markets are trading cautiously after hawkish Fed minutes reinforced their higher for longer rate outlook, while renewed Middle East hostilities keep inflation concerns in focus. Gold remains pressured near one-week lows, pound-dollar strengthens towards 1.3400, and Bitcoin stabilizes above key support. This is your midweek technical outlook here at xm.com. Now let's get started. Now let's start with gold, which is currently attempting to stabilize after a 3-day pullback near the 4,100 level. It's still extending within this downward sloping channel, which is intact since mid-April. However, today's rebound could meet initial resistance near the 20-day SMA, which it has been testing for the last few sessions, just near the 4,134 level, before it can retest the key 4,200 level, which it has been struggling to surpass since mid-June. And then further to the upside, it could retest the 4,290, which is a 23.6% Fibonacci retracement of the pullback from the early March highs. And then above that, the 50-day SMA is a key resistance level to watch near the 4,375, last tested on the 17th of June. And higher up, the key 200-day SMA near the 4,500 psychological mark is really the key level to watch for a more sustained upside. Now, to the downside, risks remain. There's also this bearish crossover between the 50 and the 200-day SMA exerting technical pressure on the pair. The stochastics are also reflecting the downside pressure and the broader downtrend intact for gold in the medium to near term. And the RSI is flatlining just below neutral. The MACD though is improving from negative territory, reflecting this rebound today. So should it drop to the downside, then initial resistance lies near the 4,000 psychological mark, followed by the 7-month low near the 3,940 level, and then lower levels could test the 3,885, tracking October 2025 lows, and the 7,020. Now let's also have a look at pound dollar, which is extending this strong recovery from the 6-month low near the 1.3140 level, and it's actually today testing a key resistance area near the 1.3400, where a cluster of SMAs converges. The 150 and 200 SMAs are converging in this area. So should it manage to clear this strong resistance region, then immediate resistance may come from the 1.3460, which is a 61.8% Fibonacci retracement of this pullback from May peaks near the 1.3650 to the 6-month low. So this is a key level to watch, followed by the 1.3500, this psychological mark. A break above this area would revive sentiment back to the upside, as it would also penetrate a short-term uptrend to the upside, and then it could resume its bullish near-term bias. Now to the downside, a break below this heavy SMA resistance could target the 1.3300 level, where the 20-day SMA lies, followed by the 1.3250, and then a break below this area could expose this 6-month lows near the 3,180 and 3,140 level. Now, the momentum signals are reflecting the upside, but they still lack strong bullish conviction. The MACD is still in negative territory, though improving. The RSI is sloping upward towards 70, but still it's holding near neutral. The stochastics are also flatlining in the overbought region, suggesting some caution for now as the pair tries to breach this strong resistance. That said, it has remarkably retraced over half of this pullback, so this is a key area to watch. Now let's also have a look at Bitcoin. Bitcoin is also rebounding off the 20-day SMA. It has been trading in this above this region for the last few sessions. However, it's still struggling within this fresh range formed since early June, just above the yearly lows. So it is broadly under bearish pressure. This is also reflected by the momentum signals. The stochastics are still tilted to the downside, while the RSI is just flatlining and near neutral, suggesting this consolidation is likely to continue for now, while downside pressure still persists despite this intraday rebound, which could target a break back above the 64,000 level, which it tested this week, and then further up the key 65,500, where the 50-day SMA lies. Break above this area could then target mid-June highs near the 67,000 area, and then it would exit this range and perhaps attempt to reclaim the key 70,000 level, which hasn't been touched since early June, and the 100-day SMA. And a break above this area would also signal a break above the long-term downtrend drawn from the October 2025 record high. And it could then reclaim the 200-day SMA and the key 75,000 level, which is really the area where some positive sentiment can return to the crypto market that has been under pressure. Now, to the downside, a break below the 20-day SMA could expose the 60,000 psychological mark, and then further below the 50,000, which lies just above the yearly lows near the 57,790, which are 21-month lows. A break below this area could print fresh yearly lows, perhaps targeting the 55,450. Now that's all for today's market wrap. Thank you for watching.